When looking at investing in gold, our next guest says it all comes down to performance. And right now, royalty and streaming companies may just be the best way to make money in the sector. Joining us is Frank Holmes. He's in Toronto this week. Frank, good to have you back on the show.
It's great to be here. I just get the red eye coming in from Vancouver.
I've done that one. It's a tough flight, Frank. Let's talk about the performance that we're seeing in royalty and streaming companies, surpassing gold's performance here. This makes you say that it might be best to look at these companies over the metal, Frank? What do you think?
Well, I think that it's important when you look at gold stocks and royalty companies. The royalty companies have a much less volatility of cash flow, and the lower the volatility of cash flow, the greater the institutional investors come into that space. So I think that that's what's important to look at. So rather than having just big cap companies like the Freeports or the Newmonts, it's a safer bet to own the Franco-Nevadas, the Silver Wheatons, and the Royal Golds.
Well, we also have the GDX trading below its 50-day moving average, which some technical analysts say signal that it may be time to jump in. Are you agreeing with that?
Well, you know, it's a great question, because will it hold, then gold will have a big surge. However, if it pierces through it, because if something comes out of Jackson Hole, something that's hawkish, the rates will rise and gold could sell off $25 to $50, which I think would set up for a great buy.
So gold here, Frank, fell to a 4-week low, but I know offline we were talking and you're saying it doesn't really bother you much. Do you expect to see more pressure ahead of Jackson Hole? You just mentioned it. Do you think we could see a lot of action here?
Well, you know, it's the sentiment. The market's right now ignoring that there's $12 trillion of negative interest rates around the world of bonds, 12 trillion. And there's no foreseeable sustainable rise in rates around the world. And everyone's relying on the monitors. So if we take a look at that thought process, just the hawkish sentiment means rates would go up, but not real rates, just the sentiment of it, and that makes gold go down. Vice versa, if they're dovish statements, then gold starts to rally. I would rather stick with the fundamentals long term. Negative real rates are global phenomena, and gold is a great asset class.
All right, Frank, let's get to your touchdown pass now. I'm assuming Jackson Hole.
Jackson Hole it is. There's not really significant economic data. There's some PMI coming out tomorrow, but there's no doubt having the largest central bank in the world, having this group think together, this religious revival, the sentiment coming out of there will have an impact on interest rates, which always have an impact short term on gold prices.
Frank, as always, happy to speak with you. Thanks for joining us.
Great chatting with you.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.